following Iran's attack on Israel that sent the cryptocurrency lower. Joining us in an exclusive interview this morning is Galaxy Digital CEO Mike Novogratz. Mike, it's great to see you. We've been talking about it now for the last 2 days and even over the weekend. What precipitated this drop and how folks should think about Bitcoin in the midst of at what you would have thought would have been the moment that it would have?
Well, listen, you can always look with really myopic eyes at price action and try to read too much into it. The reality is Bitcoin is, started the year at 42,000 and we're at 62,000. So it's one of the best performing assets. Saturday, Iran attacks Israel. The only asset that's open is Bitcoin. People are very long risk assets in general, stocks, crypto, other things. And so the natural reaction is to go to the safe. And safe is still globally dollars and T-bills, right? You're seeing the dollar rally. The other bigger...
But isn't the dollar not supposed to be safe? Isn't the whole point of Bitcoin that the dollar is not safe?
Well, listen, in time it isn't, right? I mean, look what we're doing now. We're going to vote today to spend more money on wars, right? President Biden is slipping in more money around the Supreme Court to pay off student loans. We have.
Well, that may be, but the point is that it appears that when things are bad and people are scared, they buy dollars. So
when things are bad and people are scared, people with leverage want less leverage. And so they take where they have leverage and they sell it. It's why stocks are going to look at the NASDAQ chart. It does not look good, right? The NASDAQ's had an amazing...
Yes, but the whole point of Bitcoin, and we could roll tapes of you and I having conversations for the last 5 or 8 or more years about this, is that it's not supposed to be correlated. That's the whole point of this exercise.
Listen, there's not one asset in the world that is not correlated all the time, right? What happens is portfolios grow, and then a new piece of information comes up, and fund managers, retail accounts want to have less risk, not more risk. And when something has gone from 40 to 70, there's a lot of risk built into it. There's a lot of leverage built into it. And you can see it with the meme coin phenomena. You can see it with other cryptos. Lots of money pours in and animal spirits take over. And so you've got to wash out those animal spirits. It doesn't invalidate this overall thesis.
Can you tell from the flows how much of this selling is a function of folks who were actually selling the underlying Bitcoins directly versus those who were playing in this new world called the Bitcoin ETF?
I think very little in the ETF, right? Most of the ETF buyers are buying for the first time, and they're putting it away as a part of their portfolio allocation. And so you've got, these 9 companies out there selling Bitcoin to new investors in lots of ways. And so I think most of those are hodlers. You look, though, like this ecosystem has been around since 2009, and really in earnest since 2017. There are tons of ways you can get leverage in crypto, and that leverage builds up when people feel good about the space, and then it gets whacked. And so you saw over $1 billion of liquidations on Saturday night. That's retail people who have leverage bets on crypto exchanges that get wiped out, right? It's not big hedge funds coming in and selling on Saturday night, or institutional investors coming in and selling on Saturday.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're in the Cash App. And we have Mike Novogratz on CNBC. And we know he's not going to give us the whole truth, but he definitely gives us some of the truth. But this whole narrative that the drums are beating is what caused Bitcoin and crypto to pull back, guys. We know that is definitely not true. It was just a distraction so the Fed could run the money in the back door. We've seen this movie before. The Fed is not going to tell you, I took your money. They always have to set up a distraction. And then we had Jerome Powell in the house today. Didn't say much, just went off the same narrative. The economy is doing wonderful. But then he slips in something, guys. He slipped in the comedians. He has jokes while the people are hurting. And he's clearly reading off a script. And we see the master magicians have plenty of jokes. And then we have the bank failures. Yes, we know the bank failures. There are more to come. High rates for longer. Commercial property is going to get destroyed. But we know it's all for the plan of the fourth industrial revolution. All this commercial property will be turned into affordable homes. Remember, guys, this is a plan. It moves in phases. And we have China's economy is coming in great. The numbers came in wonderful. And where is the fourth industrial revolution going to rise first? That's right. The emerging markets led by China and that digital yuan backed by that digital SDR. But we have some lawmakers playing the Hegelian dialectic, want to delist some of these Chinese firms. But we had all of our major corporation CEOs over in China doing big business with the enemy. And throughout history, guys, we've seen this movie before. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I think Randy pointed out the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability. Our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3 and 6 month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it. And that is Canadian comedians and comic actors. I started to count the number of really great, funny people, and I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara, and Andrea Martin. And I could go on. So something's going on up there. Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
About a handful of them. I think some of them are still overly reliant on uninsured deposits, have a lot of concentrated commercial real estate exposure. And then I think the larger picture really is the potential instability of their uninsured deposits, even for the healthy ones, if we have another bank failure. So I do, as I said before, I think Congress should reinstate the FDIC's transaction account guarantee authority so that they can stabilize those deposits. Congress isn't doing much of anything these days, so wait in line. But I do think that this is still a problem for the regional banks, and fingers crossed if there's another failure, we're just quite not sure what's going to happen.
The 10-year yield at 4.6%, and some forecasting it to go to 4.75%, 4.8%. Does that concern about regionals and the exposure to commercial real estate, does that heighten?
Well, yeah, I mean, the higher the rate. So part of the problem with commercial real estate is that a lot of it's refinancing this year and next. So the higher the rates go for those refinancings, the more distress there will be with borrowers to be able to continue with their payments. But with CRE, the commercial real estate, we had this problem during the great financial crisis. There are things you can do. There are workout strategies. Some people pejoratively call it extended pretend. You don't want to do that. If the borrowers cook, the borrowers cook. But a lot of these borrowers can get through with some active workout strategies. So I still think it's a slow burn over time. And again, the big issue is whether there's another shock to uninsured deposits because of a bank failure. And I think that is really the biggest challenge confronting regional banks right now.
Hey, Contessa. Well, yeah, I mean, these are lawmakers. A lot of them are on the China Select Committee, and they have some concerns about some of these companies being listed. So they're encouraging the NASDAQ to delist Chinese companies that are basically on this Pentagon blacklist. The Republicans on the Select Committee, they're sounding the alarm that some Chinese companies like Heisai Group has raised over $190 million while being on this Defense Department list of Chinese military companies. And they're worried about those connections between the companies and, of course, the Chinese Communist Party. Congresswoman Ashley Hinson, who led the letter, said that Heisai's connections to China pose a risk, both in terms of the U.S. military potentially using their technology and in the data that Heisai is collecting in the U.S.
It's Chinese Communist Party protocol that they have to share. It's the military-civil fusions. There is huge risk here. It's why I want to work with the NASDAQ and other exchanges to make sure that they're not offering these listings and putting them out there. Again, it's a huge national security risk. We don't even know how much of this technology that Heisai could access within our own U.S. military going forward.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. look, we have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And very much a traditionalist. I like staying with the dollar. You know that from when I was there. It's make the dollar the choice. I hate when countries go off the dollar. I would not allow countries to go off the dollar, because when we lose that standard, that will be like losing a revolutionary war. That will be a hit to our country, just like losing a war. And we can't let that happen. And too many countries now are fighting to get off the dollar. And
Crypto Teacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, BitChute, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tanya save the village. Part 2. King Joshua and Grandma Tanya save New York from COVID 33. Part 3. King Joshua and Grandma Tanya goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.